Where is the crypto bottom? How far can we potentially continue to crash from here? What's the worst case? That's a question I was discussing today in the premium market update. So there are daily videos for the premium members. Today's video is published here for free on YouTube. So hope you enjoy the content. Let's jump right in. Welcome to another market update today on the 13th of May 2022. So this is the Luna chart and this is the first stage of a V-shaped recovery. So if we buy right now, we can make approximately 1 quadrillion%. So yeah, I hope you got the sarcasm here. Please don't throw any more money at this, right? When UST is not at $1, more and more Luna tokens are being printed, meaning this is just collapsing and you're just on the wrong side of the trade. Now it might make sense to even short this. It seems to be a pretty safe bet. I don't know a decentralized way to short this. There might be futures contracts on Binance or so where you can still handle with this, but I don't have an account and so I can't really give advice here. But yeah, this is a pretty safe further destruction. So when we look at the top winners and gainers in the last 24 hours, right, this is what we now see for Luna, 99.6% in the minus. In the last 7 days, there's even a rounding error. It says minus 100%. So this is where we are at right now. The market cap is still 500 million. UST's market cap is 4.7 billion. So we would still need billions of dollars, right? We would still need like probably 2.6 billion or so to get this back to pack. That's the question, right? Can Terra Luna with that brand and that total collapse raise now 2.6 billion to restore this? I doubt it. Now there are of course also other losers. In general, we are going down. It seems like the more risky the project tends to be, the more it tends to lose. So Sandbox crypto gaming is going down quite a bit. Convex Finance, interestingly enough as well. I'm not exactly sure why that is. When we look at the top winners, ApeCoin did lose massively in the last days. It was one of the unique losers in the last week. So maybe this is just covering of short positions. Not 100% sure, but I would still not touch this, right? This is high risk in an environment that is rather risk off. Now let's look at a few charts, right? This is Bitcoin. Of course, no matter what we are currently looking at, they're all below the moving averages, so we can basically almost ignore them. We can also ignore the RSI signals, in my opinion, because buying the dip when overall things are going down only makes sense if you want to DCA in anyways and you plan to buy every month anyways. Then the RSI signals might help somewhat, still better than random, but don't expect to instantly make money from this. This is now Ethereum, so clearly this trend is a thing of the past, and Bitcoin versus Ethereum is finally breaking out. So the Bitcoin dominance likely is also increasing, and this is exactly the kind of move that we are looking for when a crypto winter starts. So when you look at the dominance here, right, in January of 2018, this is where we hit a low in the Bitcoin dominance, as in how much percent of all of crypto is in Bitcoin, right? This was in January 2018. When we look at the Bitcoin price in January 2018, right, this is where we had our height and where we then had the subsequent more than 80% crypto winter. And so in this 2018 crypto winter, where we went down by 80% in Bitcoin, Bitcoin dominance still went up. And that's because the altcoins, they lost way more. Okay, so Bitcoin went from 36% of all of crypto to 60%. And this seems to be happening now as well. So Bitcoin dominance tends to rise because it is comparatively less risky. Now even the stablecoins become more risky. So maybe this is just the start. We will look at the overall picture with regression and market value, realized value, score, etc. afterwards as well. Now, there was the depack of Tether, right? So let's look at this. We had this depack over here, so 5% of a drop of Tether, so Tether FUD. I made a public video on this. Now we are pretty much restored back to normal, so that's good. I will still keep my short position on Tether open though, because it is pretty cheap to have that running anyways. And the sword of Damocles regarding incoming regulation that is planned to arrive within this year, it's still present. And it's very unclear if Tether can withstand that point of regulation. And so simply as some kind of insurance policy that is also not very expensive, right? 1 or 2% per annum. I think it's good to keep the Tether short open. There is no real price risk, and the only risk you take is that the stablecoin that you swapped it for will collapse instead of your Tether. But given how the market reacted, right, this is maybe another important thing. Let's look at the stablecoins. Look at how the market reacted to this implosion of UST, right? This is the UST collapse where it went down 60%. And here are the other stablecoins that are not UST. We can see people were fleeing into USDC. They also went into BUSD and DAI, but Tether suffered from the UST collapse. So this seems to really be the black swan that could come. If it does, then brace yourself for at least another 50% drop in Bitcoin and I don't know what percent drop in altcoins. So this time USDT was able to survive. All the other stablecoins they gained, right? Because money was being swapped from UST to DAI and BUSD, etc. I think it's good though to keep that short open. What's interesting is when we look at this, that we also have other stablecoins that tend to now be deep pegging. I was not aware of Neutrino USD yet. Maybe this is the next thing that could be killed. So it's in April of 2020. If you've got any kind of background around this, where the stablecoin is mainly used and why this is also going down, feel free to share this in the chat. Would be interesting. Maybe this is something we could even profit from. Maybe it makes sense to also short this. There seems to be a version here on the Binance Smart Chain, so it would be interesting if anybody has any kind of insight or research made on Neutrino USD. Now the big question is always, where is the floor? And I've been using this rainbow chart for a very long time. This has been around for a long time. And I think this kind of a regression, there are several regressions, right? But this kind of a regression is pretty useful. It was already around with pretty much the same fitting during the Corona crash. And we are now in buy territory. When we zoom in over here, you can see these points, they are the middle points of the band, right? We've got a band here. And when we hover over this, this is the middle point. It's not the lower point of the band. So assuming we would fall at the same rate, continue to fall this, then the middle point here would be 19.4K. And we have come below this, right? We have come here during the Corona crash below the lower band, very slightly. The bands have roughly 6K in delta. So when we take another 3K off, because this measures the middle of the band, the very bottom here is 16K, right? The very worst case. And I think we would need another real strong black swan event in order to push us that quickly to that kind of a level, to 16K. But yeah, that's also the lower band, or the very worst case that Ben Cohen was talking about in the recent video that we talked about in the chat. I wouldn't hold my breath though for this to happen, right? I do think it continues to make a lot of sense to dollar cost average in and to go really heavy on this once we reach 25K, 20K, because the risk versus reward, right? When we are at 20K, we might go down to 16K or so, but you're risking only, say, a quarter of the capital maximum temporarily for potential upside of like 5x, right? We could still go to 100K in Bitcoin easily over the long term, and we just have to wait long enough. So that's how I see it, risk versus reward. When we are at 25, at 20K, we just buy, we don't look at this too actively, and we keep this holding for a few years. It's very likely that this will play out. That being said, right, these regressions, they are all made during a bull run, right? A long-term bull run. This is when Bitcoin here started. So we're basically fitting a logarithmic regression over the Bitcoin chart while the technology stocks did this. But this is not the entire extent that tech stocks can move, right? Bitcoin was an invention after the global financial crisis, after the mortgage crisis. So this is how it started. If we see something like this again, then maybe even this regression might break. So we can't be 100% sure of anything, right? Even if we see 16K in Bitcoin at some point, I would not take out a huge loan against the house and say Bitcoin can never go to 10K or never to 5K. It could, right? If we see something that drastic again, it could. I don't think we will see a repetition of the dot-com bubble because technology stocks nowadays have way more fundamentals behind them than in the year 2000, right? But something like the global financial crisis, I mean, why not? It could happen. So everything is risk versus reward. Nothing is certain. Even reaching this lower band here is not set in stone. It's simply just a model among many. So get more risk on, the more we fall, but be able to stomach volatility long term and buy the things you are okay with to not trade out of in case we do fall, right? Don't do any kind of very risky altcoin speculation right now. Now let's look at a few other models. So this is the 200-week moving average. So this would give us a bottom at 22K now, roughly. We haven't closed a week significantly below this. So let's see if we will see a first over here. But yeah, there's different models with different kinds of predictions. No model is perfect, but we have to work with something. And so that's how we then can add more risk to the portfolio as more and more models will tell us that the bottom is in. We have already come below the 2-year moving average, right? So when we look at these times in history, these were good accumulation periods, right? Where we had been several months below the 2-year moving average and we bought into this, then we would have really enjoyed the nice rally afterwards. We have just come below this. So that moving average is now at 35K. So definitely if you can stomach the volatility, if you can stay in the market for long enough, then continue to DCA every month. We can still fall quite a bit further, right? When we look at this in 2019, we crossed that 2-year moving average in November at around 5,600 and we went all the way down to 3,200. So this does not mean by any stretch that we have now seen the bottom, but it does mean that if you buy right now and you hold for the next 4 years, it's very likely that this is going to be an investment that will pay off. At least that's my opinion, right? No financial advice. With another logarithmic regression, which I don't like as much, which now implies around 70% per annum growth with that slope here, we have already come below the lower band. So this was the Corona crash where we went around 1/3 below the lower band. Currently, this lower band is at 34K roughly. Let's zoom in. It's at 33K. So 1/3 below this is 22K. This would be the low point here. So there's different ways to calculate this. You can either take this or you can take something that's a bit more conservative in terms of slope and work with those 19 to 16K bottom. Those are the ranges we're talking about. There's 2 more models I find pretty useful. So this is market cap minus realized cap divided by the standard deviation. So that's the market value to realized value z-score, which basically gives us an idea of how depressed the market is, right? Market cap is simply market cap. Realized cap is for what kind of a price did Bitcoin move in the past. So this is an on-chain metric. So the realized cap is here in yellow, right? We can see it barely falls. It's either going up or going sideways, meaning people either take profits or they're simply waiting for new highs to be established. So this is then how long-term Bitcoin can grow. We can see obviously we are not establishing any new highs. People also don't tend to sell in aggregate. So we're going sideways here, meaning when we look at the current price versus the realized market cap, this is the delta we are now at. So 550 billion versus 457 billion. And the price goes below, which has happened before, right? Let's look at this here, Corona crash and 2018 crash. The price goes below. This is historically a very, very good buying opportunity. It's also been shown here in this red line, right? This is then the green area. So when the price is below, the red line here is in the green area. We are now coming pretty close to that. So this is simply a measure of how much have people sold off, how depressed are they. It's kind of like a measure of how much are the long-term holders in losses to a certain degree. And if they are in losses, then this tends to be a turnaround point. A bit of a different way to look at this is not to take the realized cap and divide it by the standard deviation, but instead to just look at 1 week versus 1 to 2 years of realized holding. So we are now basically comparing the short-term traders versus the long-term holders. When there's a lot of short-term trading happening, this is very heightened. This is a selling signal. When there's a lot of long-term holding happening and there's no short-term traders anymore, then the short-term traders don't inflate the price, right? Because they're only in the market for the short term. Then it's only the long-term people that buy in regularly anyways that then can create the bottom in the price. That's the idea of this chart. And so with that metric, we are not yet in the green, right? But we could potentially say that the volatility is going down a little bit, meaning less and less short-term traders are in the market. More and more people hold Bitcoin for the long term. That's why I probably didn't see the height here in the red area. Will we reach this green area? Because this seems to also be somewhat tightening. Nobody knows, right? It's simply just another model. And these models, they send bullish signals at different times, but the lower we go, the more they will be aligned, and at some point in time, latest at 16k, but already at 20k, the majority of those models will go very, very bullish, very, very green. But as said, all of these models, they only consider the time since September of 2010. So there is a limitation here, but I would still give quite a bit of credibility here. I don't think that the Fed wants to see something like this again. I think they would rather be okay with some inflation than seeing asset prices being cut in half again, because that just opens a whole other can of worms. Okay, hope this update was useful. Don't try to time the bottom too much. Nobody knows the bottom perfectly. Try to simply get more and more exposure as we are going down and buy things you can psychologically defend on holding over many years and also over potentially many percent in losses, and make sure that your portfolio allocation reflects that, right? That you don't have 90% of your wealth in crypto and that you actually cannot afford to lose in case we don't directly turn around. Sometimes these things, they can take a while, but buying now obviously is better than buying 1 year ago. The price is lower, but also all these models here, they tell us now is rather the time to buy than the time to sell. That was not necessarily the case 1 year ago. So that's the long-term outlook. Get rid of everything that you're not willing to hold over the long term and continue to dollar cost average in. Ideally, buy more every month the lower it goes, as in put in more US dollars the lower the Bitcoin price is. So if that's the kind of content you find useful, feel free to check out the premium membership. It's currently $49 US per month. If you do decide to sign up yearly, you do get 2 months for free. We've got daily market updates like this. And of course, there's also all kinds of other nice benefits. So the link to sign up is down in the video description. Alternatively, you can check out this video over here, which shows more details on what you get with that membership. Thanks for your support and see you next time. Bye-bye.